Yeah. Surprise, a little different than you used to. Yeah. Dropping these bars on YouTube, knowledge I introduce you. Yeah. We chasing this money like it's the prize, it's the voodoo. Fugazi, fugazi, it's just a lie we buying into. We need some cars on deck. Get the rollies, get the Moe, all the Mars on deck.
All right, good evening, everyone. Welcome. There shall be no freezing today because my computer actually arrived a week early. So please do tell me if at any point this freezes, because if it does, I'm going to be very, very disappointed. It will be $2.5 spent that would be a waste. So hopefully this goes to plan. Right, so you've seen the title. There are headlines at the moment about nationwide reviews of reducing mortgage rates as of tomorrow. So I want to talk a little bit about that. Maybe run a few scenarios, because they're doing this for people moving home, they're doing these for people remortgaging, and they're also doing it for first-time buyers. So I'll have a little bit of a calculator just to give an example, a brief case study. What is this going to mean in terms of the mortgage payment, so on and so forth. If you do get value from this, by the way, obviously, please smash that like button. It just means that other people like you will get to benefit from this video once this stream is finished. And it also means that the YouTube algorithm will essentially push this and promote this so that other people get to see it as well. And if you've not already subscribed, please consider subscribing. All right, so this is the topic of conversation: NatWest to reduce rates as of tomorrow. Now, let me just get my screen here fixed properly, because if you followed the live that I did on, I think it was Thursday or Friday last week, we spoke a little bit about the Bank of England. And last week, I did a live where I talked about Andy Haldane. And he was one of the chief economists. He's the country's foremost expert when it comes to financial stability. He was at the Bank of England from 1989 to 2021. I did that live, I believe it was on the Wednesday. Then on the Thursday, we had comments from the boss at the Bank of England, Andrew Bailey, saying that, indicating that we may be at the end of interest rate hikes. So bearing in mind that the Monetary Policy Committee is due to meet, when is it? Just under 2 weeks from now. I'm quite surprised that we're seeing Nationwide make this move. But I do want to cover this little piece that was in the news a little bit earlier on today. And these are some comments from one of the committee members at the Bank of England. So one of the members who's actually on the Monetary Policy Committee. Here are some comments that I think are worthy to basically share with you guys. So this is by a lady called Katherine Maines. She's a member of the Bank of England's 9-person Monetary Policy Committee. Said that she would rather err on the side of over-tightening than reducing or not hiking up rates, as is being suggested. And the reason for that is, as you can see in the headline here, that cutting interest rates could embed high inflation. This is what this policy maker is warning of. And this is a very, very interesting take, because as we've already covered last week, Andrew Haldane was talking about the fact that we are in a 50-50 scenario when it comes to a possible recession. So people are concerned about that. And tightening monetary policy, so raising interest rates so that the cost of borrowing becomes more expensive, therefore encourages you not to borrow more money, isn't necessarily good in this equation figure, because even as businesses, if it costs more money to borrow money, you're going to have to pass that cost on to people, which is inflationary on its own. So what they're talking about now, it's a debacle. Do they increase rates? Do they not? And on the live last week, I was like, listen, I have no idea what they are going to do. So this is the backdrop that we're looking at here. It also says in this article, Katherine is saying here, the MPC, which is the Monetary Policy Committee, is in charge of deciding the central bank rate, which anchors mortgage and savings rates, and is due to meet next. Actually, they're due to meet next week to discuss whether to lift them higher than the current 5.25% rate. So we were expecting that it's likely going to go to 5.5. Jury's out on this at the moment. So against this backdrop, we're seeing Nationwide now moving to increase interest rates tomorrow, which I think is going to be really, really good news. Now, this is live on the Sky website. Let me just get down to the position that we have here. So this is the article. You can go check this out on Sky. This is breaking today. So Nationwide has announced that it will drop its mortgage rates tomorrow. Selected fixed rates will drop by up to 0.29 percentage points, it has said. Now, let's have a look at the categories here. So if you are a new customer moving home, reductions of up to 0.29 across 2 and 3 year fixed rate products, up to 95% loan to value. Okay, so if you're moving home, so that's assuming you haven't got a portable mortgage, which a portable mortgage, by the way, is if you're currently in this house that I'm living in right now, and let's just say you're at 3%, a portable mortgage means that you can go and move this particular mortgage onto a new property and keep the rate. So these are for customers who are moving homes who don't have a portable rate. So from 2 to 3 year fixed rate mortgages up to 95% loan to value, there's going to be a reduction of 0.29%. Now, they're saying here that a 3 year fixed rate at 60% loan to value with a 99 fee is going to be 5.64%, which is reduced by 0.14. Then a 2 year fixed rate at a 95% loan to value with a £1,000 fee is now going to be 6.44, reduced by 0.29%. We can do the maths on this a little bit later, but this is one that I'm really interested in because I think most people who follow this channel will be first-time buyers. So this is what you can expect if you're a first-time buyer at the moment with Nationwide as of tomorrow. So it says the reductions of up to 0.25%. So the last interest rate that we've seen, essentially this is going to wipe this off, right? 0.25% across selected 2 and 3 year fixed rate products up to a 95% loan to value. So on a 3 year fixed rate at 75% loan to value. So for this, you need to have 25% deposit. Okay, so 25% deposit, 75% loan to value with no fee. This is the really, really good one. No fee. So you haven't got to worry about stumping up that first £999 or £499 or adding it onto the mortgage. That is going to be at 5.94%, which is a 0.25% reduction. On a 2 year fixed at a 60% loan to value with a £999 fee is now going to be 5.89%, reduced by 0.06%. Now, these are the ones that are highlighted. We need to have a look at this again tomorrow because it does say here up to 95% loan to value, but there is nothing being highlighted here for people with a 5% deposit. So 25%, 40% deposit really is what you're looking at here in terms of the loan to value categories. Let's have a look at what that might actually look like in repayment terms, essentially, for you. And let's just have a look and see. Right, so let me just grab this very, very quickly. So we're looking at £175,000 here instead, and the rate was 5.9594. Let me just share this so you can see this. Okay, so this is just a simple mortgage calculator that is online on Google. So if you're a first-time buyer looking at a property of £200,000 with a 25% deposit, so your loan to value is going to be 75%. It means that essentially you're going to be borrowing £175,000. Did I do that right? Did I do that right? I don't think I did that right. Let me just make sure I did that right. That is not right. Is it? 200 times 25%. 50,000. So £150,000, sorry. And we're looking at here, right? So this is what your mortgage amount is going to be, £150,000 at a rate of £594. Now, I'm going to assume that your average mortgage term is 30 years. This is what you can expect your repayment to be. £894, which is still going to be a huge increase from where interest rates have been previously. Obviously, I mean, even if you were to have a look at, you're on a 2.5% interest rate that you could get maybe 2 years ago, it's still, £200-300 more expensive. And this is what I mean when I say that we are moving into a completely different era right now, where mortgage costs are going to be more expensive, and therefore you need to try and factor this in as much as you possibly can when looking at your mortgage cost. But this is what it's going to look like from tomorrow. Now, bearing in mind, in this article, there was a 0.25% reduction in this rate. So initially it would have been 6.19. Let's see what difference it actually makes. So we're looking at £894 here. Let's put that rate hike back in, 619. So £918 roughly is what it would have been. So what's that? Probably about a 30 quid, £34 difference roughly in monthly repayment. But when you extrapolate that over the year, you extrapolate that over your term, all of a sudden you're leading into really big numbers. So this is going to be good news for first time buyers. I'm a little disappointed not to see anything on the 95% loan to value, and maybe there'll be something that will come up on the Nationwide website tomorrow, but as of right now we can't see what those numbers are for first time buyers. Now, if you're looking to remortgage, these are the rates. So it says here reductions up to 0.18% across selected 2 and 3 year fixed rate products, up to a 90% loan to value. So this will include a 3-year fixed rate at 75% loan to value with no fees at 6.09. So that's a reduction of 0.06, and a 2-year fixed rate at 60% loan to value with no fee will now be 6.14, which is a reduction of 0.18%. So these will make a difference. The question is, how much of a difference is it going to make for people? Now, if you are in the position that many of us or many people are going to be in, let me just come full screen here, where mortgages come in up due, and maybe you're going to be due. Where are we right now? We're in September, maybe the new year, January, maybe in February. You've got a window of opportunity right now to be able to lock in these kind of rates. And look, in doing so, if you did lock in, say, a 5.94% rate, for example, if everything goes according to plan, and if the Bank of England decides to hold on rates or maybe miraculously reduce rates, if mortgage rates kind of fall below your fixed rate of 5.94 that you secured, you potentially have the ability to move on to a lower rate anyway. So because you've got that 6-week window, I want to encourage you, don't just sit on your hands. I've said this a number of times on the channel, but I'm going to say it again. Just don't sit on your hands or twiddle your thumbs. Be proactive, go out there and have a look and see what you can actually secure. Now, there's a big caveat to this. This is being reduced for now. I'm surprised that they've announced this today without knowing what's going to happen when the Monetary Policy Committee meets next week, because I would have thought that they would hold fire, wait to see what's going to happen before doing this. Now, if we fast forward to next week, and let's just say we do see another 0.25% increase, taking the base rate up to 5.5, I'd be interested to see whether they keep these rates or whether they cancel these out. So anyone who gets them between now and then is going to be great, but whether they stop these offers and actually put the rates up next week, I don't really know the answer to that question. I guess we're going to have to wait and see. But I think on taking this at face value, this is good news, because at the end of the day, anything that's going to save people money on their mortgage, be it £30, £40 a month, you calculate that out, you extrapolate that over the year, it's still in the hundreds of pounds. I think every little bit helps, but I'm surprised that they've announced this today, knowing that there's going to be a meeting next week. Does this signpost that maybe they know something that we don't know? Does this potentially signpost that there isn't going to be a rate rise next week? I don't know. We're going to have to wait and see. I mean, looking at the forecast that we always have a look at, the last time I checked, nothing had changed. The forecast was that we're still due to see another rate rise in the next quarter or so. Let me just bring this up and see if I can just share this with you guys so we know what's happening according to the forecast. And again, we take the forecast with a pinch of salt, right? But has anything changed on interest rates specifically? Where is it? No, nothing's changed on interest rates. So we are still expecting to see that the bank rate goes up at some point in Q3 to 5.5%. And then we're going to have a hold until Q2 2024. That's what the forecasts are telling us right now. Obviously, this changes. So we don't know what the conversations are. We don't know what's being said right now. But if you take what one of the committee members is saying, then perhaps they might just vote that they tighten further and try and err on the side of, I guess, caution, really, to ensure that inflation doesn't get bedded in too much. It'll be interesting to see, and I didn't have time to have a look at this a little bit earlier on. I'm going to see if I can find it right now. If I can find Katherine's voting track record, come to think of it. How did I find this last week? Let me see if I can do this right now live with you guys. Apologies. Bear me 1 second. Voting history. Hopefully this will bring it up, because I'd be interested to know whether or not she is one that often goes and is an advocate for increasing the bank rate, or whether she's kind of hawkish and doesn't necessarily want to do that. Her track record will tell us this if I can find it. If not, when we revisit this, I will come back to it. It's normally an Excel sheet. Now, where the hell did I find it the other day? I'm sure it was on the website. Here we go. There we go. I will share this with you once it's downloaded so you can see. Let's see what her track record is like as a member of the MPC. Bear me 1 second whilst I'll just get my screens right. Also need to get her right as well. Where was she? Katherine Maines. Who are you, Katherine? And by the way, guys, just let me know in the comments or in the chat. Do you think this is good news? How are you viewing this? Is this good news for you? Is this something that you think is welcomed? Or are you kind of like, it's still a bad situation to find ourselves in? Let me know what you think in the chat whilst I try and find Katherine on this sheet. There we go, Katherine Maines. Why is she not on here? That's weird. Okay. I might not be able to show you this right now, guys. I will have a look and see, but she's not on this sheet, and it's a nine-member team. Oh no, there she is. Okay, let's have a look and see. What was her track record on this? Same. Let me just share this with you so you can see what I'm seeing. Let me just get this one. Stop sharing here. And let's share this window right here. Because I've got a new computer, I need to get permissions for everything, it seems. And it just says that it doesn't have permission to share Excel on this live. But let me just talk you through what I'm looking at, essentially. So, Katherine Maines, it gives you a record of the base rate. So if you go back to September 2021, the base rate was 0.1%. And she basically voted to keep it stable. And she's only right. So up until, when was this? Up until December 2021, the bank rate was 0.25%. She voted to keep it the same. We saw a bank rate increase on February of 2022, where the bank rate went up to 0.75%. She voted to keep it, well, not to increase 0.5%. She opted to vote for 0.5% increase. And from what I can see here is she appears to be pretty hawkish, a little behind the trend. So as the bank rate increases, she tends to want to keep the bank rate at the same rate. I'm trying to see where she kind of voted in line with everybody else. And the one instance that I can see here, when was this? I need to expand this one over. Was in August 2022. The bank rate went from 1.5% to 1.75. She voted for that. In the following instance, I mean, we saw a jump to, this shows me a jump here, to 2.5%. She voted for it to be at 2. So her behavior, her track record suggests that she doesn't like monetary policy increases and pushing interest rates. She's a little hawkish in her record over here. So maybe it doesn't necessarily, it's not surprising that that's her stance on this. But I want to hear what you guys have to say. Let me just jump a little into the comment section here and see what you guys are saying. Carly's just saying that she just fixed. You just fixed with them. That's good. It might be worthwhile picking up the phone to them, mate. When does it begin? Has it started yet? Because if it hasn't started yet, you could potentially have a chat and see if there's any way of you getting onto a lower rate and get a better deal. It's worthwhile asking the question, Carly. If you don't ask, you don't get at the end of the day. Someone's just asking here, would it be poor to use 2 different mortgage brokers? I'm assuming the mortgage brokers aren't charging you a fee, because if they're charging you a fee, then obviously financially it doesn't make any sense. I would stick with 1, if I'm honest, mate, in opposed to using 2, because if one of them jumps the gun or one of them, you don't communicate clearly that you're working with another mortgage broker. I mean, if the only time it might work in your favor is if one is restricted and one is whole of market. So when I say restricted, there can be some mortgage advisors where they're working on a panel and they can only go to a pool of agreed mortgage lenders. If they're restricted, they're not looking at the entire market. So if you've got one of them that's restricted and the other which is whole of market, which means that they'll look at everyone, including the pool of providers that the restricted advisor looks at, then yes, it could be beneficial, because really it is likely that the one who is whole of market will get you a better deal. So in that instance, it would be, but I would still then say that actually it's probably best to work with a whole of market advisor straight off the bat, in opposed to working with a restricted advisor. So it could help, but I think just to keep things simple, it's probably best just to use 1 broker in opposed to 2. I'm a nationwide customer due to remortgage in March next year. I'd be having conversations with them right now, mate. See if you can actually lock in. I mean, where are we right now? We're in September. So are you 6 months out? You may be on the cusp. You might be within the 6-month window. So might be worthwhile having a little chat with them. Bernard, welcome. Thank you very much for joining. Catherine saying here, do you think they'll just go up again when the wage announcement earlier? It's going to be interesting to see what happens, because for the first time they're saying that wage growth has outstripped inflation. I think the number before wages was before bonuses for the last 12 months was 6 point. What was it? 6? Is it 6.8 or 7 point? No, I think it was 7. It was 7 point something. With bonuses, it was 8.5%. I remember reading that this morning. So potentially, I mean, the equation that they'll argue is that if you're getting wage rises and you are stripping inflation, the argument is that that's money that is potentially spent, which can then increase inflation. But I've not read anything today that gives any inkling as to what's going to happen with the Bank of England base rate because of wage rises. So I think we'll have to wait until next week to find out for sure. 7.8, someone is saying here, 7.8. So yeah, we'll have to wait and see what happens next week and what the verdict will be next week once the MPC has had its meeting. But I think this is generally good news for today. It's good news for people who may have been looking at the mortgage rates and thinking, oh my God, what do I do? But yeah, if you are in a position where you are going to be remortgaging in the next 6 months, please be proactive. I cannot stress that enough because yeah, and we'll wait and see what happens within that. Anyway, guys, I want to say big thank you for tuning in. If you do get any value from these kind of things, obviously, please do smash the like button. And if you haven't already subscribed already, consider subscribing. This is going to be a really, really quick one this evening. I appreciate you. I'll probably be back tomorrow, maybe. Tomorrow's Wednesday. Tomorrow's Wednesday, so I'll probably have a chat with you again tomorrow. I did do a chat on the podcast yesterday asking whether you would be tempted to go for a 30-year fixed rate and what kind of terms or conditions would attract you into a 30-year fixed rate mortgage. I think from when I first asked this question in 2022, the poll is very, very different. The messages I've been getting and the appetite it feels is very, very different to what it was 12 months ago. But we have had a significant number of interest rate rises to make a 30-year mortgage, fixed rate mortgage, more attractive. There was a comment in the comment section which was incredible. Someone who watches the channel moved to Australia, bought a home, locked into a 30-year fixed rate mortgage at 1.2%. How mad is that? And that's what I'm going to leave you with at the moment. We're not going to see anything like that here in the UK. But imagine if that low rate of 1.2% that you got on your mortgage, if you had been able to lock it in for 30 years, would you take it? I know that I would, for sure.
Surprise, a little different than you used to. Dropping these bars on YouTube, knowledge I introduce you. We chasing this money like it's the prize, it's the voodoo. Fugazi, it's just a lie we buying into. We need some cars on deck. Get the rollies, get the Moe, all the Mars on deck. We got the traders, got the picture with the Bentley in Dubai. Are you dripping in designer, looking fly? On the bombardier, sipping on the wine. Broke man, we broke. Where's the fun in being broke? Stocks and bonds get you yo. That's what I'm teaching these folks. I see that smoke, see them choke. Getting coked while I'm researching these stocks. Buying coke. 20 months on the channel, million people taking note. I got a warrant for Buffet. I'm coming for his vote.